So here we are now officially in 2025, investors, and I just first want to start this video off by saying Happy New Year to each and every one of you. I certainly hope you are now officially ready to get kickstarted here into the new year exactly as I am. But before I start rolling out new videos about my big plans for the new year, I want to go ahead and give you one last dividend portfolio update video so you can see that even a small dividend growth oriented portfolio like mine is equally, if not even more powerful than some of your higher yielding dividend portfolios out there. And of course, if you are someone out there on the younger side, my hope is to shift your perspective just a tad bit to see that you really should be focused on total return more than the dividend yield in and of itself. Now, with that said, I personally started 2024 off sitting just under $200,000 in my brokerage account. To be exact, $194,576.40. And although 2024 was quite a roller coaster ride, we ultimately saw that the S&P rose by about 23%. So I'm more than thrilled to report I actually beat that by an additional 3%, and I returned roughly $40,330.76 this year, bringing my portfolio value now to $234,907.16, and that's heading into 2025. The goal, of course, now is to get to $300,000, which I know is quite lofty, but given my strategy for this year, believe me, this is more than accomplishable. Now, if you want more on that very strategy, subscribe, because I want you to stay tuned on what exactly I'm about to do. It will definitely trick all of you out. Now I'm going to go all into detail throughout the coming weeks. So again, subscribe, but let's get back to it here. 2024, because a lot changed within my portfolio, primarily when it came to the size of my portfolio itself, which at the start of the year I had over 20 holdings, to which now I am down to just 10 holdings. And popping open my portfolio tracker with Gutman, I want you to go ahead and see what's under the hood right now. We're going to discover that Vanguard's S&P 500 fund, ticker symbol VOO, is my first layer worth of my investment foundation, totaling now over $64,000, or roughly 27% of my portfolio. Following VOO, I have layer number 2 of my investment foundation with some serious growth firepower thanks to Vanguard's tech ETF, that's ticker symbol VGT, which makes up about 19.7% of my portfolio, just under 20%, totaling over $46,000 and soon to be more. Then I finally break into my individual holdings with Apple as my largest individual stock, coming in at $29,685 worth of my portfolio, or about 12.5%. Following, we have Alphabet, which totals out to almost $26,000 worth of my portfolio, coming up just over 10%, before I then jump out of tech and into a safer industry here with healthcare, and more specifically United Health, that I took full advantage of during all of the mayhem this past month or so, with this position now up to $23,000, or about 9.8% of my portfolio. Then I have my cash position, which is not a holding per se, but nonetheless roughly $11,000 sitting in there on the sidelines right now. That's going to be moved into a tax advantage account ASAP and immediately then invested. More on that later. And from then that very cash position, I get into some more micro positions, if you will, with Tesla coming in at 3.7% of my portfolio, followed by Visa, a position now making up roughly $7,900 worth of my portfolio, but easily a stock in focus for me this new year, which I'd like to scale by dollar cost averaging over the next 12 months. And then I get into Amazon, another non-paying dividend stock, though it's just an incredible buying opportunity when I bought it, now making up 2.7% of my portfolio, before I get into my smallest positions with Realty Income, which very well may be sold soon, but as I weigh out this decision, I'm not entirely sure yet, so again, stay tuned. And then we have Lockheed Martin, the smallest position here, that over the course of 2025, I'd actually like to get this one up to over 100 shares, and right now it's actually looking like a pretty good buy opportunity. We're going to see that in a hot second. Now, these positions really mean I'm tech heavy, as we can see here, roughly 52% of my entire portfolio is in the tech sector, and for a good reason, I must say, according to my investor profile. I mean, I want you to think about my profile in of itself. I'm a young investor, 30 years old. That means I have plenty of time. I'm talking about another 30 plus years really to be in this game, with our future being tech oriented. I feel like it's a no-brainer. And then I am covered with safety here and healthcare, making up about 12.7% of my portfolio's weight. And then we have financials coming in at about 10.3%, consumer staples now at 5.4%. We have other, which I'm actually going to skip over here. And then I have a decent weighting in consumer discretionary, roughly 5% of my portfolio, industrials at 4.45%, before I come full circle here with business services, consumer services, materials, utilities, all under the 1% club of my portfolio. Now, just getting the overview here, clicking to the portfolio type, I want you to see that I'm ultimately stock heavy still at 47.9% of my portfolio in stocks. Well, then I have this other 47% in ETFs, which are all of my foundational investments, with cash currently then coming in right now at 4.8% of my entire portfolio. We're going to see that number increase, I think, soon. And so now that you actually see where I stand understand in terms of my portfolio makeup, you could see for yourself that there's not a whole lot to actually break down, but that doesn't mean I didn't receive a fair amount in dividend income during the month of December or absolutely crush it over the course of the year. So I wanted to go ahead and just share with you what exactly the December breakdown came out to be, and then of course go over the entire annual dividend income with you, just so you can see that a small but mighty dividend growth portfolio may be worth it. Now, some of the dividends that I received for the month of December were actually paychecks that I received from certain positions that I sold out of to reallocate that capital into higher conviction picks. That was important to me. Now, these dividend paychecks came in from Coca-Cola, which paid me out $13.50, as well as McDonald's, which sent me a nice McDividend there at $11.04. Now, in addition to booting those two positions, on the last trading day of the year, I actually kicked out Vanguard's total stock market index fund, ticker symbol VTI, to actually reallocate that capital. But ultimately, I received a dividend from that very index. So I went ahead to receive a paycheck of $59.38 from VTI. And then from there, I went ahead to collect 8 more dividend paychecks, to which I have all of those dividend paying companies within my portfolio. So let's go ahead and get to it. Breaking them all down, I'm going to give you just a tidbit of my thoughts on all of them. So if you want to invest into them, be my guest. First up, we have Visa, that paid me out in the first of the month. For owning 25 shares, I received $13.02, thanks to the dividend yield here coming in at 0.75%, which is small but mighty as a dividend growth stock with a solid 99 safety score according to Simply Safe Dividends. Yet scroll down to see a payout ratio at just 21% after a 16-year dividend streak, and more importantly, a hefty growth rate at 18% averaged over the last 10 years. Visa to me is a solid buy and hold for the long-term investor, and as we hopefully work our way back into a healthier economy where consumers get back to spending, Visa will certainly be a beneficiary of all of that spending. However, if you really want quite a steal right now, Realty Income is a solid choice given the fact that we're living in times of higher interest rates, but interest rates should come down even though the Fed really pushed those dates back, and it's a little wishy-washy to see the future for this one right now. Nonetheless, we're talking about a behemoth of a dividend-paying company, and even though I'm not a buyer right now as I cater to other opportunities, this is just a monthly paying dividend stock that if you need income right now on a month-to-month basis, I mean, it's a victorious stock to own. Personally, I own 114 shares. I was sent $30.33, thanks to that dividend yield coming in at 5.93%, and again, Simply Safe here depicting it as an undervalued pick while delivering through on plenty of safety with this safety score as well. Now we're going to work our way into the tech sector with Alphabet, which is not your traditional dividend investment, I know, but I personally didn't even get invested into Alphabet because I was looking for some big dividend payout. I was just looking into the future and saying we're 100% tech oriented, and I think it's just worth paying attention to, especially considering trends like AI and quantum computing. The trend should in fact be our friend. This is of course a long-term play for me as that younger investor, and while it only pays a snippet of a dividend coming in at 0.42%, I received $26.93 for owning 136 shares. Now investors, if you want me to keep making monthly dividend income reveal videos like this, you got to let me know by tapping on the thumbs up button. And moreover, if you really want to join me on this financial freedom journey, I'd love to have you a part of it with me. I want you to join me, so go ahead and tap on that subscribe button. It would mean a whole heck of a lot to me. But with all of that said, we'll get back to it here with United Health, which has been one of my more recent additions to the portfolio and an investment that I'm actually incredibly optimistic about, just given it's the largest healthcare provider within the United States. And though we remain in the midst of some mayhem with United Health and just overall scrutiny within the industry after Brian Thompson's murder, I say this is a golden opportunity for the long-term dividend growth investor and really feel that the noise will quiet down over time. You also got to consider that Trump coming into office is a friend to big business. So just as I scaled this position to 46 shares, it set me up well to receive $71.40 from United Health, thanks to the dividend coming in at 1.66%. That's nothing crazy, but we're going to actually see that it's undervalued right now, scoring a 99 safety score, all while scrolling down here to discover that we got a payout ratio at a low, industry low of 29% after 31 years worth of a dividend streak. And then we're going to see that, well, United Health has one heck of a dividend growth rate at 41%. That's averaged over the last 20-year period. Then finally, a dividend paycheck came in from Lockheed Martin, which is a position within my portfolio that, as I said earlier, I'm going to be scaling all of 2025. Ultimately, as geopolitical tensions seem to be cooling down, and seem to be, we are seeing now an opportunity to buy into Lockheed Martin for the long-term investor, in knowing that defense contracts with Lockheed Martin probably aren't going to be getting the boot anytime soon from good old Uncle Sam, always scoring more weaponry and defense systems. However, as of this video, I own 10 shares and therefore was entitled to receive $34.73 thanks to that dividend yield coming in at 2.72%, along with the safety score there of 84, not too bad. Scroll down, you're going to see then a good payout ratio here at 45%, and of course a 31-year dividend streak, which is quite impressive considering this 16% dividend growth rate over the years. But before I closed out the month of December, I then received my dividend paychecks from my investment foundations, that being VOO and VGT, with Vanguard's S&P 500 fund delivering through on $178.55 worth of a dividend paycheck, while VGT went ahead to allow me to receive $41.17. And then just for having about $11,000 in that cash position within the Vanguard settlement fund, I did receive a nice little extra dividend there of $66.29, which brings my December monthly dividend total to a whopping $546.34. That's not too shabby, and I want to jump into my dividend tracker with you to actually show you through my dividend income snowball, which is rolling right along, and we're going to see that again with a smaller but mighty dividend growth portfolio. Well, it's just not so bad to be focused on total return. Now we're going to go ahead and plug in our December income. We see immediately that I smashed all previous December totals, but most importantly, I crushed a new dividend income annual record totaling $3,102.89 for the entire year of 2024, which averages out to about $258.57 every month. Of course, as we trim the portfolio down over the course of the year, we see that I came in lower on some months throughout the past year, which isn't surprising and didn't really change my opinion on how I'm going to orient my portfolio, as I'm really focused on total return, which I think every investor should be at the end of the day, or at least just thinking in terms of more dividend growth for the long term if you're younger. Either way, we can see that the sheer power of dividend growth investing, again, dividend growth investing, is right there before our eyes. Now, there's my final 2024 update. I'd love to know just how much dividend income you actually brought in during the month of December. What were some of your highest dividend paychecks that came in? And moreover, what was your annual 2024 dividend income total? Now, I want you all to stay tuned for my big strategy video, again, by subscribing. In the meantime, I want you to go ahead and check out this Masters of the Market video where I interviewed a pro soccer star who's dividend investing and, of course, securing his lifestyle off the soccer field. With that, I will catch you all there.